You can see the screen, right? Preparing for Armageddon. All right, cool. Yeah, I'm not gonna talk too much on it, but I'm catching up with some things on Twitter right now. It's not good. It's not good. I'll tell you that. Um, I'm surprised. I mean, nothing. It's not. I mean, it is serious, but it depends on the actions that Iran takes and Israel takes, and the countries behind that will back them, especially the U.S. If that all starts to happen and unfold, then we're probably in some serious trouble. I'm not talking in terms of the market. You have to be aware of this. People freak out and they don't want to hear about these things, which I don't understand. They just want to bury their head in the sand because they live in fear, which I don't live in fear. Like it is what it is. We have no power or control. But we talk about these things because we trade these markets. They're very highly correlated and linked. So if you're just burying your head in the sand, just hoping that all this just goes away and you can't pay attention to it, then you're doing yourself a disservice, especially for trading. But as far as what's happened over the weekend, Iran fired several, I believe hundreds of missiles at Israel, which they have what they call the dome that protected them so far. We're going to see here what Iran wants to do, what Israel wants to do. If they continue to go at war, does Russia back Iran, which I believe they would? Does that include the U.S. to get into that? Because they would take Israel, and then we'd be at war basically with Iran, Russia, and whoever else decides to join that party. So there's a lot of things that can really happen. I do foresee that happening, to be honest with you. We all know that World War III is going to come. We all know this. Um, and whether or not it's coming to your place of living, we'll see. I'm not super surprised. Nothing like again, there wasn't. If something really popped off, like okay, we're really going to war, then yes, we're going to see some really volatile movements, and you have to keep your perspective and head on a swivel, especially when you're trading, because things can happen like a switch, especially something over the weekend like that happening, which is ironic. A lot of times it happens over the weekend. Um, it's going to affect the market in the opening this week. So far, not. Um, just keep a watch as we go over the weekly forecast, but keep a watch on oil, keep a watch on gold, keep a watch on commodities and things like that, just to understand what's going on. Dollar index, especially if we move into something where the U.S. decides to declare war, that's going to push the dollar higher in value. So it's good. War is unfortunately good for the economy. It's the reason why they do it. Um, so I'm curious to see. I mean, technically speaking, I see dollar index continuously rising. I've been bullish on it for several weeks now. But if something like that happens, then you have to understand, well, what is the correlation between that? If we go to war, then dollar index is going to continue to rise. That's going to push all equities lower. So it's something you have to be aware of and obviously keep in the back of your mind when you're forecasting, look at the market, understanding risk on, risk off, certain perspectives like that. So as far as dollar index, which I will start with, this is clearly one-sided to me. It technically speaking is clearly one-sided. Why? Because we've now closed above multiple premium bearish PD arrays and there's nothing else in the way. So it's not a surprise to me. I really liked the delivery of last week with dollar index. So what does that mean for NQ is we should be looking for lower prices in it. We should be seeking that, especially with the movement and the volatility we've had in dollar index. It'll probably catch up with it eventually in terms of the volatility. This is my main focus here. If we get above that, then I'd be looking at the remaining portion of this weekly inefficiency, which is that high there, and the remaining portion of that inefficiency. Once we work into that, we'll see. I don't want to go too far in the analyst, but that's really what I'd be aiming above the buy side. If you go to the daily time frame, it's a decently market maker buy model that you can see. We filled in the remaining portion of this. So do we want to drop down into that? Utilize it. It's this entirety here. In all reality, that is your basically inversion level. But that wide of a inefficiency, you'd really only want to see the 50% at most reach back into. We annotated this, which is a mitigation block, not a breaker. but do I see that being returned into? Probably not, because it's in a hurry to get somewhere. So my prediction is, if anything, we have a slight retracement into this inefficiency, the inversion, maybe form something in here, like tomorrow on the close, we form a fair value gap there, dip into it with the inversion, and then we send price higher. What we'd be seeking is really this liquidity void here. This liquidity void there is what you'll extend to your right, and that's what we'd be seeking. So we'd be looking at that to be targeted, and eventually these two highs here. So that one, these are relatively equal. To me, it's very clearly one-sided. This is a very good spot to be trading. If you're trading, let's say euro or something that's, I mean, even NQ, it's good, but something that's really highly correlated with it. It's a clearly one-sided daily time frame market, because I can't make a case for price going lower. We're disrespecting every single bearish PD ray. We're getting above it, utilizing a support, respecting bullish PD rays in here, continuously expanding higher. Again, all this was never a surprise to me. We've all been looking at this and expecting higher prices in it. So it's good. We're going to look for these two levels. I don't know this week. We'll see with the volatility. Am I going to go lower time frames to analyze it? No. I'm just looking at a daily time frame, really. We'll touch on bonds and some other stuff in here. Bonds are still gravitating lower. So bonds are very much in sync with, or not in sync, but their correlation with NQ. This should push NQ lower. Even looking at the 5-year note, we're almost towards this low in here. I bet the 10-year we're working towards it as well. So these are still dropping off lower, and yields are still moving higher. So especially in a very war climate, yields will take off higher. So we'll see if that comes into fruition. Everything's in sync with bonds and yields as far as in correlation with dollar index. We just need NQ and the other indices to start moving off lower, and everything will really be in sync with each other. Same thing with EU. If you want to get an inverse correlation with dollar index, we've reacted off of this bear shorter block in the weekly. Expanded lower, probably looking for the sell side, which is residing down here. Just quickly analyzing it. So that'd be cool for this to continuously tear off lower. And bonds, or gold, when things become very scarcity, money tends to go into something that is more physical, more tangible, something not like a crypto, something where you can physically trade it between somebody. And if war really starts to pop off, I think a lot of people would be buying. This is more or less like what ICT says, a supply and demand driven market. The algorithm, I believe, is obviously still here, but as far as the price, it's driven by the demand of it. So looking at that, looking at silver, platinum, copper, looking at oil, wouldn't be surprised if we take off higher throughout the summer months going into fall with oil going higher. Gas prices are going to be risen, so be aware of that. There's a lot of things. That's the cool part where people freak out over, war and stuff, where obviously we don't have much control, but as an analyst, at least we're able to see these things way before anybody else. I've already been mentally prepared for this. Most people, they're going to see this blindsided because they bury their head in the sand. They don't look around themselves or their environment or what's really going on. And then something like that takes off, and then they're freaking out. But for us, we're already prepared for it. We already know this is coming. So it's not like going to be a huge surprise to us. And if it does, I mean, again, what can you really do? I mean, you can prepare your house, prepare your family, everything else. But I mean, at the end of the day, what are we supposed to do here? I mean, the only thing you can really do when there's chaos, there's always opportunity. There's always something somewhere you can seize opportunity. And that's the way I view it, rather than being fearful and being, man, price is going to have a black swan event. We're going to have all these huge movements. To me, that excites me. I want huge movements. I want a lot of, large range days and weeks where I can capitalize on that. I'm not fearful of that. You shouldn't be either. It should be like, cool, man. Like we get to make a lot of money in that, while other people are, in the 401ks, the Roth IRAs, everything's just plummeting. Everybody else is taking a hit. They worked all their lives, and unfortunately, even my own family, people I know, their 401ks are going to go down the drain. And it's the harsh reality of what we're doing here. But we can make money off of this. And obviously, if you have a morally confliction with that, then you need to solve it. But for me, I don't care. Like, it is what it is, man. Like, the world's ruthless, so we might as well make money off of it. So yeah, well, I mean, As far as NQ, I'm still leaning on lower prices this week. I really would like to see that with the movement and everything we just covered in here. This is to me a scenario we'll see this week as NQ finally get out of this consolidation. If we do, that to me, especially with everything else, depending on geopolitically what happens, we could see some really large movements in here. So you have to be prepared for that. If something pops off midweek, whatever it is, be prepared for very large movements. And if you have to sit out of it, like if something's, I'm just saying, like in general, if there is models and things where I could capitalize on it, of course, that's what we'll do. But if it's moving in such a animated, huge fashion where I think the risk is way too much, then I'm not going to be a part of it. Sometimes you're just going to have to let that happen. Like in 2020, if you weren't a part of that, scroll back and look at 2020. I mean, at weeks at a time in here, I mean, we're moving in several weeks, 1, 2, 3, 4 weeks in 2020. We moved 2,000 handles, 3,000 handles. That's a lot of freaking movement, man. Like that's a lot of movement. So be prepared for that. Is if we start moving in some crazy fashion, it's a lot of risk. So if you're not comfortable with it, not experienced, or even myself, then we're not going to trade it. It's very, very difficult to teach somebody who hasn't been a part of something like that. At least I've experienced 2020 firsthand and been able to experience it. But I think what's coming will be way, way more than that. Tens of thousands of handles, something unprecedented. So enough of that. I would like to see this inefficiency traded down into eventually the CE of this wick here will be the focus as well, which if you've been with me in the last, I mean, obviously you all have, but I mean, this has been the sole focus. Nothing's really changed too much. So the CE of this wick here would be kind of the first objective underneath the sell side. And if we reach into that, then why can I not get this? Whatever. Then we'd be looking for this inefficiency we traded into. If we do that, then we'll reconsider, reanalyze, see where price would want to go. For now, I don't need to look beyond that. Again, the sell side liquidity all in here. And I'll touch on a daily time frame. If we have some type of spike underneath here and it wicks and we see some wild bullish movement, then those highs may be in consideration. I'm not saying they are. It just depends how we react and we close. If we just close and we keep tearing off lower, then I'm going to elect to believe these will be left for whatever point in time for somewhere else. As far as where we're at right now, the sell side here seems pretty easy for me to look at. I think with Friday's close, I wouldn't be surprised if tomorrow or Tuesday we run right. I'm not going to be surprised tomorrow. I forgot to touch on the economic calendar. We have core sales at 1 hour before the open tomorrow. Excuse me, give me 1 second here. I'll copy and paste it. But this is what we have for tomorrow. So this is kind of the lineup. We have 3 red folders tomorrow before the open. We have Fed speaking on Tuesday, Wednesday, not too much, Thursday, 1 red folder, and then Friday, nothing. So tomorrow, I wouldn't be surprised if we do run into the sell side tomorrow. So prepared for that and prepared to see if we do that. If we get underneath that, we still have a small remaining portion of this inefficiency there that we could probably trade into. If we do that, then I'd be looking at the CE of this wick here and even the top of it. So these kind of, you could include the very low of it as well. These 3 levels really is really what I'm going to be looking at. How we react off of it, we'll see. Volume balance as well down here. So you could extend that to your right in confluence with CE of that wick there. So kind of those few levels in there underneath the sell side would be the focus. If something like tomorrow we just see price wick underneath this, then expand higher, then I would have to see, okay, do we want to visit these highs in here? But technically speaking, with intermarket relationships, nothing's leaning, for me, it's leaning on the idea that this is going to be left. If it was going to do it, it should have done it last week. It should have ran those highs. So the fact that on Friday we had that drop lower, we're in close in proximity to the relative equal lows that, yeah, it all points to lower prices to me. Up close candle here, you can consider this as a bearish order block as well. And we can see how we react off of that going into tomorrow. So hopefully that's clear. What's up, Tal? The sell side again, that's really such a clean level for us to look at going into tomorrow. Underneath that would be the inefficiency here. that we will be looking at for price to trade down into. How we react in there and what we do. It may give price a short-term relief for retracement, but anytime you're inside of a consolidation like we've had, or this goes in any time frame, very fractal, if you're inside of a very large consolidation, price breaks out of that consolidation, anticipate breakaway gaps, anticipate price to really start moving and not to have large retracements. You should not be expecting hard retracements. You should be expecting very fast, rapid delivery, breakaway gaps anticipated. So if we get underneath the sell side, we have nice closures, breakaways until we start really tearing off lower. So that goes for any time frame. If you're inside of consolidation, don't expect a retracement after that. You expect price to run away from it. It doesn't want to go back into the range. It wants to run from it. So I get that question a lot with consolidation. It's like, well, should we have a retracement back into a premium? No, it should be simply breakaways and looking for lower prices. You plot the new week's opening gaps on here. So we reacted from this old new week opening gap, which is about 2 weeks ago, dropped lower. We have inefficiency in here. Really the last point of interest is this one. Like, I'm not saying I'm going to sell off of this. We may just still be in it by tomorrow AM session, but I wouldn't want to see it get above this old new week opening gap here. I wouldn't want to see it even return to this. Anticipate that as a breakaway. Anticipate this as your basically last point of interest, and run for the sell side in here. So we've already taken this internal buy side here. Yes, there's buy side up here, but I don't think that's going to be visited. I think that these will be left for another point in time. So that's what I'll be looking at tomorrow. Currently, I mean, 1 hour is a little sloppy. There is a semi-bearish order block there, kind of inside of. What about the RTH gap inside of the? I mean, RTH gaps, you're really only supposed to look at the current day. Like, you can extend 3 technically, but really I'm only looking at the current one price gives. Besides that, I mean, I'm not going to go to these lower time frames. I mean, yeah, the shelf life, technically speaking, there is a video over on his YouTube that he did. Technically, you can do 3, but I think it gets a little weird at that point. Like if I went over to it, yeah, something like this, just I'm not considering it. It's to me, it's too far inside of premium. Price should not retrace into that premium. We should not do that, because at that point you're near in proximity towards these highs. Then to me, if you retrace into this premium, well, what's near us? You're now closer to buy side than you're closer to sell side. So you would want and anticipate breakaway gaps. You'd be anticipating that rather than it retrace up into a premium. And that's the point I was just trying to make with, consolidations. Is like, you don't want retracements. Yes, the rules say at times you want a premium or a discount met, but you have to be in consideration of, factors that, to me, if you get into that premium, then you're close to here rather than close to there. So I think that's really going to be it. I mean, there's nothing else to really talk about. I think I covered everything in terms of overall price. I mean, nothing's really changed over the last several weeks. At one point on Thursday, I may have considered the buy side because we were relatively close, but by the time we got in the AM session on Friday, I was like, well, that's not going to be consideration anymore. To me, we're too close in proximity to this. We've failed to run for the buy side too many times. So this will be in consideration, especially with dollar index and the way it's moving. If you look at ES is definitely the weaker of the two. It's already reached into a sell side. So some people could look at this and say, well, that's a bullish SMT, but structure wise and every intermarket relationships does not point to ES just climbing higher. We've now formed a bearish weekly bearish order block in here. So this up close candle, you want to see that respected and ES tear off into lower sell side objectives. And there's some nice sell side it can clean up with a inefficiency in here. And if you have forgot, this printed at the highs several weeks ago, bearish SMT at the high here. So if you have that on a daily time frame, it's still holding, it's still proving itself correct, then we're considering that this is a true valid SMT at the top here. And what's it telling us? It's a true crack and correlation that price wants to seek lower prices. I'm sorry, it's a daily time frame. But that is what we're going to be considering. Even the weekly time frame still looks good to me. Structure wise on ES, we've been respecting every single bearish PD array. To be honest, it's the weaker of the two. So in this environment, I should be trading ES. I might. I'm not super in sync with it. Like I've been paying attention to NQ the most, and it doesn't mean that we can't short NQ. It just may be a little bit harder. We may not. We may have. You have to anticipate if it's the stronger of the two in a weak bearish environment, then NQ is going to have a little bit larger retracements. It's going to have premiums met rather than breakaways met. So you have to understand the asset class that you are trading, and if it's the weaker, and how you really determine that. Well, look at where we've made new lows on ES compared to NQ. We have not yet made new lows. So this is telling us that ES is the weaker one. And if you just look at all the sell side in here, I mean, do like a little trend line phantom. We've already cleaned up some of this, but even these relative equal lows, the inefficiencies beneath it, that seems to me pretty clear that it wants to run into that. So this good example is if we're expecting ES to be the weakest one, then this should hold. It shouldn't run up into a premium. It should respect this and run lower. So that's what I'd be looking at ES. And again, if you look at their structure wise, I mean, ES has actually been cleaner. Like NQ has been consolidating. At least this is making new lows, lower highs, new lows, lower highs, new lows. So if you look at NQ, it's a little bit harder because it's the stronger of the two. So we'll see. I'll see if I want to trade ES or not. It's actually moving a lot, so I don't have a problem trading it. If it was in a very tight, small range, then I wouldn't. So that's going to be it for this weekly forecast. I hope you guys enjoyed. I hope I'm recording, and I am. Okay, cool. So we'll be live tomorrow, 15 minutes before the open. I may annotate some things that are happening before the news event driver if something happens. So that's going to be it for the weekly forecast, and we'll be back here tomorrow. Peace.